Hi, this is Randy Finney with Right Side of the Chart, and today is July 24th, 2015. In this video, I wanted to take a look at the gold mining sector. We'll start out with the charts of GDX, real briefly touch on gold, as I did an extensive video on gold in the last week, and then we'll dig into the charts of just a handful of the individual miners that may be setting up for some really attractive long-term buy signals or long-term entries here. And when I say long-term, I'm talking trades that are measured in months, if not years, where a couple of these larger, more established mining companies are the ones that stand out to me, and that's what I'll be covering today. So let's start out by talking about the gold mining sector itself. This is the GDX chart. 2 days ago on Wednesday, I posted a static chart along with my notes, so I won't spend too much time on this. And what I had highlighted there were these oversold readings. This chart spans a decade, and even if you go back a little farther, you'll see that we've only had, including this recent reading, 4 oversold readings on the weekly RSI in the gold mining stocks, or at least in GDX. In that time period, and each of the 3 prior readings resulted in rallies measuring anywhere from, if you look at the peak low to the peak high, they were well into the double digits. I think, I don't recall the numbers, 30 to maybe well over 1,000% on this one. But as I also stated, oversold in itself is not a buy signal. The 2008 lows, the I think it was late 2014 lows, those resulted in near immediate rallies when we crossed that oversold level. You can see that was on the washout move, and then prices immediately rallied from there. Whereas in 2013, prices became oversold actually several months before the bottom was in. So as I like to say, no matter what time frame or what security you're trading, if you're using oversold, number one, it should only be one of several confirmations or reasons to go long a stock, and it's never an exact timing indicator, because oversold can either stay oversold for longer than you might expect or become even more oversold. So the safe play is to wait for a cross back above the 30 level, for at least for additional confirmation. And that's what I talked about. And so we have this large, defined by these trend lines here, this upper trend line and down below. Looks like a large descending broadening wedge pattern, although now we've had a 4th tag on the bottom. Typically you want to see 3 tags. So whether that is a pattern that's going to play out or not, that's yet to be seen. We're overshooting that lower trend line by a bit today. I wouldn't be surprised in the next week or so to see it shoot back up. But with that being said, most importantly, if you look at that lower trend line, that's prices making lower lows, while we have on the RSI and the PPO, those indicators are making higher lows, which is bullish or positive divergence. So you have these RSI oversold signals that in the past have always resulted in rallies, currently oversold now. And just a little aside here, for those of you new to the site, for the last 2 years, we've had several great trades, have gotten in long, thought that might be the bottom in gold and the gold mining stocks, but in every case we were able to exit. These were posted on the site. We got out near the highs. The last time we went long the miners was not far off the bottom here, and if you reference the notes, when we got about to this midpoint of this wedge pattern, that's where I stated personally taking profits and suggested that we're probably going to look at a pullback, and that's what's happened. And I've really stayed away from the miners for the most part, with a few trades here or there, but for the most part, I haven't aggressively engaged that sector. And it just now is starting to look interesting. Sentiment is just, as you guys know, down in the gutters right now. So nobody wants to own gold. They all think it's going to at least 1,000, if not lower. You're starting to hear calls now for 700, 800, anywhere down below. So enough on that. Again, just note that the charts speak louder than words, and to me this is showing a potentially very, very bullish setup here in the mining sector. And again, what I wanted to point out is I am anything but a gold bug. Gold bugs are people that are permanently bullish on gold and think it must and will always go up. And for those of you who follow the site, and again, all these notes are on there. I had pointed out this broadening wedge pattern. I was a bear on gold up at the highs. That was one of the longest standing shorts. So we were able to profit on shorting gold as well as the minor stocks. I pointed out this broadening wedge top pattern and one of the better risk reward setups, which is a shorting a partial rise into a broadening wedge top pattern. So we were able to short right here at this partial rise and milk a lot, not all, but a good deal of the move down on the miners. So from there to there, I was pretty much bearish. And as I often do when things get extremely oversold or extremely overbought, I'm neutral. And this is when I started becoming bullish, and we've had several nice trades off the bottom and luckily got out on time. So enough on GDX and my current positioning on gold. This is gold itself, as I mentioned, trading the miners without keeping a one eye on gold at the same time is, in my opinion, senseless. Gold, the miners are going to follow gold. You look at any big miner, you look at the gold mining index, and you'll see there's obviously a very high correlation. So I don't think that really needs to be explained beyond that. So I look at the price of gold, and as I mentioned here, there was gold, I said, would be an objective entry here at the bottom of this pattern. This is where I was looking for gold to come down to. So we overshot it. We gapped below it, and as I mentioned, I personally took a half position on that gap down below, and have not and stated will not add unless gold closes back above that pattern. At this point, I'm doing this video Friday morning, a little after 11 o'clock right now, and you can see gold's down to trading under 104. So barring some crazy reversal into the close, which I do not expect, we're not going to have a weekly close back into above this pattern. And as such, that opens a door for a move down to the next support level. When I did the video on gold recently, I stated if and when this level doesn't hold, my next expectation would be a move down to anywhere from this horizontal line. Right now it's showing around 98.25. These are rough areas, so call it 98.50, somewhere all the way down to this lower fib line, which comes in around 95-ish. That's a nice support shelf. If you go back, this goes back to the 2008, 2009 highs. We have support. We have a fib cluster there. So if gold can't, within the next week or so, manage to get back above into this pattern, then we're probably going to go down there. Now, keep in mind, that's not very far below. I'll try to measure this out for you here. When I'm doing this, catching the bottom of this candlestick, and if you look in the upper left-hand corner, you can see that the top of that range, around the 98.50 level, is about 5% below current levels, so not a whole lot. And if you go down to the lower end of my, expected range, you're talking about 8.5%. Let's even call it 9%. So anywhere from 5 to 9% more downside in gold. To me, that's minimal. It's not a big deal. Gold's been in a vicious bear market, so I think this is a great buying op if we get down to that level, and that's where my next buy point will be. And that brings me back to the miners. The miners, if gold is going to bottom there, the market has an uncanny way of knowing it, and more than likely you're going to see some of the leading mining stocks probably bottom before gold actually does. That's my opinion. I know I said that miners usually follow gold, but I'm looking now at the charts of some of these miners, and let's do that real quick, and we'll try to run through this video today. Okay, this is, as I mentioned, if anybody watched the video on the semis yesterday, I love this related items feature. All I had to do is type in, any ETF. In this case, I type in GDX, and it gives me all the components of GDX, and I like to sort these. I have a default where it sorts them by market capitalization. So what I'm getting at here is GDX, the miners and gold, especially the miners, have been in a vicious bear market. And if you're a bottom fisher, which I love to do, I love to catch bottoms and tops. It's just part of my trading style. What you don't want to do especially with gold prices falling the way they have, is try to catch the garbage, these low price, sub $1 penny stocks. So what I'm going to do is just go through a handful of the largest components. These are, stocks with the largest market capitalization. GG, for example, has a $11 billion market cap. That's actually not one of my favorites. I'm just going to go through the charts of the ones that stand out to me as objective, at or near objective long entries. And this is for you, those of you who are longer term bullish in gold, maybe those of you that really aren't gold bugs at all. You have your money in stocks right now, but you know that stocks prices are getting very frothy and you want to diversify. And you're looking for something, with minimal downside and much more upside potential in the next, year or two. So the first one I like is symbol GOLD. Now that's Randgold. I'm going to move this off to the side here. I'm only going to take a look at weekly and monthly charts at this point. The daily charts look kind of ugly right now, so I'm looking at these from long-term perspectives. So here's Randgold, and what we're looking at on the weekly time frame, it's 10-year history. You can see the calendar years down here at the bottom. And the blue lines represent a large falling wedge type pattern, and each horizontal line on my charts represents support or resistance. So what gold has here, or Randgold I should say, has horizontal support here, and I don't have these lines at the exact level, but it's rough. So we'll call that's roughly 55.36 is what it's saying there. And you can see that horizontal support, which again is defined by these 2008, 2009 highs, you can see several reactions there. Prices broke above that at the time, which was resistance. Broken resistance becomes support, and as is often the case, we see a back test. Prices held, validating that support level, and now we're coming up on that level at this time. We're not only coming up on the horizontal support level, we have this nice, well-defined lower downtrend line, which has contained all the moves lower. So prices, although making lower lows each time, have very nicely kissed this line each time and had significant rallies off there. So there's 1, 2, 3, now 4. So, if you're playing the odds, playing probabilities, you want to go long in the next tag here of that line. And the fact that it lines up with horizontal support makes it even that much more attractive in my opinion. Now, to help further put the odds in our favor, we look at divergences here. As prices are making lower lows each time, the RSI and the PPO are not. They're making either equal lows or slightly higher lows in this case, and slightly higher highs, and that is positive divergence. So again, from a charting perspective, that's about as objective as it gets. Yes, we are in a downtrend, so any of these have to be considered aggressive counter trend trades. Excuse me, and these are also, because I'm using weekly and monthly charts, these aren't exact timing indicators or exact entries that we can hone down and say 58.15 right now, or even $58 that's our buy point. You need to use wider stops because gold is in a pretty vicious sell-off right now. It's moving down sharply after it broke support recently. And what I would do, and what I'll do personally with these, is begin to scale in at or around these levels, since we're just above support, and have my stops set somewhat below those on weekly closing levels. So scaling in long here anywhere from current levels 58.15 down to, but not below. I would not add below even a penny below these support levels. It does not make sense to add. If you have a position, you can give it a little room on the stops. Where you put your stops will completely be dependent on what your target is. If this plays out, I would expect gold to come up to at least the horizontal line here. I have a resistance line at around 73, which by the time it gets there, if you look at it this way, and let's draw this out real quick. If we come up like this, at that point, we're probably going to be right at that downtrend line. Those will come in together, and that's intersecting, resistance levels. So that would be an ideal target. So again, you measure the move out. and you set your stops accordingly. If you're targeting 70 and the stock's at 58 now, well, that's $12, roughly $12 upside. You want a stop of, probably no more than $4 on the downside. So 54 would be your stop if, let's say, you entered everything here at 58. Okay, so that's gold. Enough on that one. Let's look at the next one here, which is SLW, Silver Wheaton Corp. Nice descending price channel defined by these orange lines here. The white arrows, similar to GDX, they show every oversold reading in the last decade here. And again, in every single instance, you had rallies, measuring well over 1,000% to, well, I'm not gonna. Let's try to just figure this out. Since this is a log scale chart, I want to highlight the the magnitude of these rallies. That was a 71 if you look to the left, bottom left in the green, roughly 72%, and I didn't even capture the bottom, so that was greater than a 72% rally. So don't try to minimize these moves. This is a huge range on this chart. It's the scaling, because it's log scaling, ranging from a low, the $2 lowest price bar up to $55. So 70-something% rally there. My point being that even if this isn't the bottom in the mining stocks, just as it wasn't before the last few times we went in on these oversold readings on GDX and some of these stocks, these are very significant tradable rallies. I mean, that's a bull market and then some. So these are, if you want, you could call these, cyclical bull markets within a secular bear market, and there's no problem, trading those long with the appropriate stops in place. So again, there's all the oversold readings. Once again, we're oversold, and we're, in fact, at this point, the RSI is down to 2032. So it looks like we're at the most oversold levels we have been since 2008. So like I said, and at the bottom of a price channel, which is support as well. So two reasons there to start scaling into or take a long position in SLW. Okay, moving on, AEM. AEM, we're looking at a weekly time frame here. This is a nice support line. This level, it's white. Let me help it stand out a little. Color that orange, and then you can see there's some, we were a little below it. I believe that's as far as the trading history goes back on AEM. Let me check here real quick. Nope, that's not the case. Okay, while I'm here, this is a monthly chart, so we go back to 1985, 84 actually, and you can see this is that same line that I had there, the support line. So call it, roughly it's showing 2060 here. We have a reaction high back in the mid 90s. That was then that resistance at the time was taken out. Broken resistance becomes support. We had a tremendous rally once that level was taken out, that previous reaction high. We came back to make a near, essentially a perfect back test of that. You can see the red candlestick there, the little wick at the bottom. And now we're coming up on that support. So again, we're looking at a monthly time frame here, and we're looking at bullish divergences. This rate of change 12 often defines bull and bear markets, as you can see in the past. When it's negative, you're in a bear market. When it's positive, you're in a bull market. What did we have here? This was a very nice bull market uptrend line from the late 90 lows, and we had a negative divergence at the high there. And so yeah, we see the divergent high, divergence on the ROC 12, the RSI, and the PPO. And, this is just a large bearish rising wedge pattern. This is no different whether you're trading these patterns on a 15-minute time frame, a 60-minute time frame, daily. In this case, we're looking at a monthly time frame, a chart that goes back decades. And the same principles apply. It amazes me, or I should say it never fails to amaze me, how well these patterns work out on any time frame. So that trend line, the primary uptrend line, was broken following the divergent high. Prices came back, made a perfect back test, and there we go. Now, a quick measurement when you look at a rising wedge pattern, if you take the distance, the largest part of the wedge, which I'll try to do here. Okay, this is just a rough estimate. So that's about the widest part of the wedge there. and you add that to the point where the wedge broke out. That gives you a rough approximate. Oh, I'm sorry, that's where the wedge broke down. A rough approximation of where that move may go. So, what will happen here if we break this support? There is a good chance that we go down to this next support level here. However, we've already had a very healthy correction. Some people will even take the measurement and put it at the top of the wedge pattern. In that case, it gives you a projection to about where we are now. So, point being that there could be more downside, but buying here at this multi-year support level is objective, scaling in. And because you're using a monthly chart, best to scale into this position. Give yourself, take a small enough position that you can allow for wider stops. That, in my opinion, is critical when trading the gold stocks because of the volatility. If you are a person that uses 2-3% stops on your position, find another sector to trade because that's not going to work in the gold stocks. When I trade these things, whether it's swing trading, longer term trading, I'm going for gains that measure at least in the double digits, sometimes the upper double digits. And as such, I'll use stops that often well exceed 10% on these positions. So if you're shooting for 40-50% upside, there's nothing wrong with a 10, 12, 15% stop. Now, what we're looking at here that I haven't mentioned yet, at this point, we have bullish or positive divergence. We have a falling price channel. If we look, it's actually a bullish falling wedge, similar to bullish falling wedge pattern, or a slightly contracting descending channel. And look at that nice, clean, bullish divergence on just about every indicator, all of the ones that I have below, the ROC12, the RSI14, the PPO. So a bullish falling wedge to support with bullish divergences. That's just my ideal setup. Everybody has their own trading styles. Those are some of my favorite patterns. There's the weekly chart showing multiple tags of this level here that we're coming up on. So on the weekly time frame too, you can see the divergence in place. So that's AEM, another one that looks good for a long-term hold, especially should gold bottom here soon, which I believe it will. Okay, next one up is, I have a question mark by AU, not one of my favorites. Still one of the bigger names. This is according to the data I'm looking at, a $2.7 billion market cap. So again, I'm sticking with big names here because those big names tend to be better capitalized, better balance sheets. AU, this is in a descending price channel right now. We've just made the third kiss of that descending price channel right here. We had divergence at the point of the previous tag of that price channel, and now we have even steeper divergence. So this is what I call double positive divergence. Divergent low followed by an even steeper divergent low, and that holds true also on the PPO. As I often state, the PPO is better used for long-term time frames and or stocks with a very large price swings. When you're looking at stock, in this case that's ranged in the past decade, we're looking at here from $6.34 all the way up to 63. That's a big price swing. The PPO is going to do a much better job on the MACD than the MACD, I should say, but it works in a very similar fashion. Now, what I like to see, and I often mention this, is to confirm divergence, I want to see a bullish crossover on this PPO. That means this red line here, I want to see that come back over the white line, which is the 9 EMA, and that will confirm the divergence. Right now, that PPO is headed straight down, and that's because the stock is clearly in a downtrend. So this is a catch a falling knife trade. Have no qualms about it. If you take this stock, it can continue to fall. So my suggestion is, if you are a longer term gold bug or bullish on gold or want to add some exposure, keep your position small for right now, because things could get worse before they get better. And the reason sometimes you want to take a shot here at these support levels, if and when that snapback rally comes, it's going to be fast. You'll probably see this stock and a lot of these others that I'm talking about today shoot up 10, 20% or more within just a few days, especially after such a sharp sell-off like this. Okay. Next one up is GFI, Gold Fields, and this is a weekly chart, so we're looking at a 10-year price history. This was a support level which was broken. Prices moved down. We tried to regain it. The white lines here and here indicate what looks like a broadening wedge pattern, aka megaphone pattern. We're at the bottom of that pattern now. We've had 3 tags at the top and now 2 at the bottom. So not the best. We only have 2 tags, and really ideally you want to see any 2 tags could be random points. It really takes that 3rd tag to validate a trend line. So I'm not crazy about this one here, but we do have, what I do like on it, we have some really nice divergences. So that's a divergent low that the stock is putting in. Looks like the PPO is starting to want to curl up here. We haven't yet had a bullish crossover. If and when we do, keep an eye out here for, any type of bullish candlestick price action, such as a bullish engulfing candlestick or maybe a 2-3 day candlestick pattern. Also, first and foremost, let me reiterate, keep an eye on gold and the gold mining sector. If you see any bullish price action on one of these stocks in the gold miner in the sector, GDX or the Huey or gold continue to fall and break support, that's probably going to be a whipsaw signal. So again, trade these. Always trade whatever gold stocks you're looking at with keeping an eye on gold as well. If we do see a bounce up, we're going to have some resistance here around the just over, call it around the $3 level. That's going to be resistance on any bounce. So if you're a very quick trader and you want to play an oversold bounce in these miners, and you were in this one at 276, you can get a pop up to $3. That's still a pretty good move. And if we get above there, it would look pretty good for GFI, especially if that happens in the next week or so here. There's a monthly chart. And this goes back, to, if we look at the crosshairs here, there's late 2000. We're coming up on the all-time lows in the stock. Reaction lows will act as support. And you can see divergence here. It's not drawn out, but the ROC12, the RSI, PPO on the monthly time frame as well. GFI is looking to put in a divergent low as it comes down to its previous all-time lows. Next one up is KGC, Kinross Gold, and this looks like a possible falling wedge or at least a descending channel shaping up. What I like about this one is we do have a nice, pretty well-defined uptrend line, which will trigger, the ultimate, buy signal, and we're quite a bit of ways from there. But if you see a reversal, a couple things I like about this, I should say. Number one, the bullish divergences. As you know, I'm big on bullish divergences to confirm a likely or an impending trend change. Those are in place. Again, let's see a bullish crossover here in the PPO to help. Let's see some bullish candlestick action. Let's see gold mining the miners as a whole start to firm up. Let's see gold start to firm up, and then this one really shows some promise here. And for those of you who are longer-term investors, whether it's KGC or any of these that I'm talking about, so what you do here is if you're scaling in here, and these do work out, let's say that gold and the mining stocks start to reverse soon. On this one, you'd have first resistance coming in here. I don't have it drawn, but there's horizontal resistance around 220, and then you have the top of this wedge. We're likely to see a reaction on the next tag of that. So let's say this trade works out. Here's how I like to trade these. Might go in here at about around $1.65. Take some profits around that 220 area. If and when we get there, it's not drawn out here, but let's just show it real quick. That would probably come in right about the time we get to this downtrend line. So we'd have intersecting resistance. I can think of no better time to book some profits. But then what I'd be looking for to reposition is a breakout above. I might reposition either on a pullback, that initial tag, and at that point, I'd be using the 60-minute charts and the daily chart to help time those entries and exits on that trade if I'm micromanaging it. But what I'm referring to here is micromanaging a longer-term trend or position trade. If we catch, with this, we could be looking at a multi-year bottom in the gold mining stocks here very soon. You can also note here this red line is the 40-week EMA. Look how well that has capped these advances during this bear market, at least when this downtrend line was in effect. So if and when that downtrend line is taken out, we're also going to take out that 40-week moving average, which is really running almost perfectly with that line, and it has capped every advance since. So this would be uber strong buy signal, let's just say. We'd have a breakout of the downtrend line, a breakout of the 40-week moving average, and a breakout line. Right now I'm holding my crosshairs. The horizontal line marks the next horizontal resistance level. It's around 260. And that's defined by this reaction high here at the crosshairs and these reaction lows over here. So that would be just a tremendous buy signal launching from this base here. We're looking at a weekly chart and most likely project up. I ignore these lines for now. I haven't adjusted these, but my targets would be, well north of here and maybe ultimately up back around this $7 level. That was a key support level which I had on this chart for a long time, and once that support was broken, that's really where the bottom fell out of KGC. So ultimately, I think we'd probably over the next couple years maybe, work our way back up to that $7 level. And you're talking from a stock price, it's about $1.64 right now, so you can do the math on those gains. Okay, CDE. This is one of my favorites, and I would have to say that CDE has put more money in my pocket in the last 2 years than probably any other mining stock. This one has just been a gem to trade. Worked very well. That it works well off the technicals. We've had some great moves. This one's been an active trade on the site quite a bit in the last couple of years, and I've even had some, off-book trades, some trades that I don't post. It's been a good one. So looking at this weekly chart, 10-year price history, you can see that CDE is right now coming up on some major support. Had the reaction high here back in late 2014, had this reaction low here in 2008. Now we're there again. Bullish divergences in place. Again, like everything, we need to see this PPO curl up, but right now it's poised to put in positive divergence. That will be confirmed once the PPO makes a bullish crossover. If and when it does so, prices might want to peek through there and make a marginal new low. If so, I welcome that, because we'll still have, unless prices really plunge from there, we'll still have bullish divergence in place. So let's say we spike through there, it would wash out a lot of weak hands in the stock, which is really good for the long-term foundation. When you wash out weak-handed longs, it just puts a new pool of holders in that stock that are more likely to hold the stock for the long term. So again, I would welcome that scenario. Let's say maybe it goes down to $3, somewhere around there. Divergence is in place, and then we see a nice reversal. Here's a nice downtrend line to watch, just like the previous stock I mentioned. We're looking at the 40-week moving average is another resistance level to clear, which will probably come in around each other. So just a lot of promising potential bullish developments. We're not there yet. We're still in a downtrend, but these stocks sure are looking attractive, in my opinion, for long-term, multi-month or multi-year holds. CDE, we're still on CDE. I'm sorry, a monthly chart. So what we're looking at we also have bullish divergences on the monthly time frame. I haven't drawn it here on the ROC 12, but you can see it from this peak low. The line slopes up. RSI. PPO, there's the prices making so far slightly lower low than that previous low. The blue lines here represent a descending price channel. I think that's probably the same downtrend line I just showed on the weekly chart. So that would be, in other words, you take a partial position here, down around these lows, maybe even allowing for a temporary break of support, and then your next long-term add-on signal would be a break of this downtrend line. All right, we've gone a lot longer than I wanted to on this video, so I'll wrap it up here with IAG, and this is really the last one I wanted to cover anyway. Nice, fairly decent descending price channel. We have several tags there. 1, 2, 3 on the bottom, 1, 2, 3 on the top. Right here, what I often do, I'll exclude, these long candlestick wicks or shadows. If it captures more points, you can see there's a couple reactions within there back to back. So I think that's a valid price channel. So we're at the bottom of a price channel, i.e. support. Bullish divergences in place, or at least potentially. We had a confirmed divergent low right here on the last time we got down there. PPO turned back up. I expect it will here soon. Yes, this is a lower priced one, $1.26 a share. But with that being said, so a little more aggressive there, but you're buying a stock at support at the bottom of a channel with potential divergences in place. And I think this one has the potential for a quick snapback rally all the way up to this 175 level. Okay, this has been Randy Finney with the right side of the chart. I hope you enjoy.